If looking at your financial statements leaves you with more questions than answers, then stay tuned. In this video, we will be exploring how to monitor trends, identify areas that need your attention, and establish acceptable expectations for returns or profits using internal financial benchmarks based off of your profit and loss statement. The best part is you will find this tool useful even if your financial statements vary from month to month or season to season. I'm Kristie Van Pay with Prosperity Bookkeeping, helping you take the guesswork out of small business bookkeeping. Before we even get into it, I would like to invite you to follow up this video tutorial with the advanced version of what I am about to show you. I will put a link in the description below that will allow you to access the additional tutorial. If you are watching this video, it may be because you have found yourself in a position similar to one of our clients, who we will call Mark. Mark had been poring over his profit and loss statement for hours one month, trying to figure out where he was losing money. He could see that his sales were down and his costs were up, but because his sales and direct costs fluctuate so much each month, it was difficult to see any type of trend or pattern that would help him identify which costs were creeping up. Without a place to start, he wasn't sure how to address the problems and prevent them from eating away at his bottom line. As a small business owner, he knew there was not a lot of room for error, and time was of the essence to get this problem resolved. With our help, Mark realized that he needed financial benchmarking to solve this problem. Financial benchmarking gives you a point of comparison to reference against your performance. A quote from the Center for Association Leadership puts it nicely. Financial benchmarking provides an entry point for inquiry. A difference in performance measures does not necessarily mean there is an issue to be addressed, but looking at the variation helps you or your leadership explore important questions. Let's take a look at what Mark did to quickly create financial benchmarks for his organization. So before we even dive into the instructional tutorial here, I just want to advise that in order for this to work for your set of books, you do need to have a clean set of books. So if you know for sure that there might be some errors or that maybe you're behind on your bookkeeping, you're definitely going to want to keep that in mind, and trying to make benchmarks off of data that isn't, up to date and accurate probably isn't going to give you a very good result. However, you can still practice. There's no issue with that. So, practice while you can, but I would definitely suggest having somebody review your books to make sure they're in good working order. We do offer a service for a QuickBooks health check. We charge $160 at the time of making this video for that service, and I will put a link in the description below for you to be able to contact us to request that if that's something that you're interested in. Otherwise, maybe your accountant can help you with it, maybe your tax preparer, or if you already have a bookkeeper of your own, they'll probably, then you really shouldn't have issues with your books, but if you do, maybe you can work with them to get them all straightened out. So that being said, for the purpose of this demonstration, I'm going to be using a QuickBooks Online test company. So if you would like to follow along with this video, or you want to play along in QuickBooks Online, but you don't want to use your own books, because you don't want to mess anything up until you've figured out how to do this, you can use the QuickBooks Online sample company, which you can find by just typing in QuickBooks Online Test Drive in your web browser's search bar, and then it will come up for you. So I did notice when this came up that there is one down here that says test drive newqbo.com. This is not an intuit.com domain. I don't know who this is. It could be completely legit, but I personally wouldn't trust it. So just make sure that whichever one you're clicking on, because there's two of them here, that they have the intuit.com domain name. Then you know you're going to be in the right place. So if you click on that, it's just going to ask you to do a little verification that you're a human, and then you'll be in the company and ready to go. So I already have it open in another browser window here. So I'm going to get rid of this. And when you get in, you're going to see something like this. This is Craig's Design and Landscaping Services. It's their sample company. So looking at this, the first thing that you're going to want to do is you're going to want to go to Reports, and you're going to want to run a profit and loss statement. Now, for the purposes of this video, I'm going to do just a 3-month time period. But you're going to probably want to do longer than that. I would suggest at least a rolling 12-month time period. Unless you've had something significant happen in the last 12 months that would throw your numbers off, I would probably, and especially if you're a seasonal business, you're going to want to capture, well, if you're a seasonal business, you'll probably want to do it by season. So you would maybe want to set your date range to be, your busy season, and then another date range for your not so busy season. So that during episodes of seasonality, you're comparing apples to apples instead of trying to compare it to the year as a whole. But if you don't have much seasonality in your business, a rolling 12-month period. So in reports, we just want to click on profit and loss here. Okay, and you'll want to make sure that you're running this report in the same way that you run your normal monthly financial statements. So what I'm talking about here is the basis. So if you normally run your reports on a cash basis, then just make sure that you set this to cash. But if you normally do accrual basis, which for management reporting, I feel like accrual is the better way to go anyway, but there are exceptions to that, then I would choose the accrual. Okay, I'm using a date range of the last 3 months. So I'm doing August, September, October. And I am going to choose to display the columns by month, because when you first put the dates in, it's not going to display them by month. It's going to display them as one lump sum total. And I want this displayed by month, so I'm just going to choose to group them by months. Okay, so now I want to collapse this data because I just want to point out a few things. And it's easier to see when it's collapsed. Okay, so when we're looking at this, we can see here that our profits varied considerably from one month to the next, and we can also see that our income varied significantly in October compared to August and September. Now, September had more revenue than August, but it had less profit, so clearly there's something that's causing that to happen. And if we look at our expenses, we can see that, it's not real clear, because if I'm looking at this just as it is here, I'm thinking to myself, okay, well, expenses were the lowest in August, which was also the lowest sales, and they were in the middle of the road in September, which was also, our revenue was also middle of the road in September. And then in October, our expenses were the highest of the 3 months, and so was our revenue. So it seems to me that everything is looking okay. But that doesn't really tell me a whole lot more. And it doesn't tell me if there's an issue, or if there's something that needs to be looked into, or if that's just the way the cookie rolls. So we want to dig into this a little bit deeper. So the first thing that we can do to try to dig into it more without even leaving QuickBooks is we can add one little extra feature to the report here, where we can look at things as a percentage of income. So I'm going to pull this drop down here where it says compare another period, and I'm just going to choose percentage of income. And I'm going to run my report. Okay, so now we've added the percent of income field, and I would just kind of go across and compare my numbers there to see if there's anything that stands out. So, one thing that I can see here is that there was cost of goods sold in October, but there wasn't in August and September. So that right away makes me ask, is this a bookkeeping error? Did we forget to enter some things? Why isn't there any cost of goods sold for those 2 months? Maybe they were classified to the wrong place, or whatever the case may be, but right away off the top of just viewing this, we can see that maybe there's an error, and maybe not. But it's the entry point for inquiry, which I really love that. I love that quote from the Center for Associated Leadership. I think that just really says it very nicely. Okay, so looking at our expenses now, we can see that in September, our expenses were really high. They were 97% of our income, which is, really high. And that would explain why we had a loss in that particular month, but it doesn't really tell us why they were so much higher than the other months. If I look at August and October, they still have quite a bit of a difference, but not nearly as much as September. So that's something that I would definitely want to dig into more as well. And then we have our other expenses category here, which in September was 60% of our revenue, and in October it was only 28%. Now, this is why viewing things as a percentage is very helpful, because if you recall, our income is quite a bit more in October. So even though $2,000 is, almost $1,000 more than this $916, it was only 29% of our revenue for October because our revenue was so much higher. But this $916 in September is a big deal because that was 60% of our revenue, on top of our regular expenses already being 97% of our revenue. So clearly September has some investigating to be done, I think, just to try to figure out, is this legitimate? Did something, maybe somebody had bought a large purchase, an asset that needs to be depreciated, and it should be on the balance sheet instead of on the income statement. It could be something as simple as that, or it could just be, maybe there's, and I never like to, imply this, but it happens, unfortunately, in organizations, but maybe there's theft happening, and you need to investigate into that. So this is a very valuable exercise, and we're going to take this even a step further now, because what we're going to do is we're going to create a benchmark using historical data that's going to give us the average percent of revenue over the course of time, so that we have something to compare these numbers to, so that we know which ones are out of line compared to the norm and which ones are, that's just the way we normally operate. And we'll be able to see that no matter how much our income fluctuates, no matter how much our expenses fluctuate, and even if there's seasonality, we'll be able to see those differences. So this format is kind of a lot to look at. There's just a lot of columns, a lot of numbers, and honestly, if you were trying to look at this for a whole year at a time, it would get really overwhelming. So we want to simplify this down, and the easiest way to do that is to export this out to an Excel workbook or a Google Sheet or Numbers, whatever kind of spreadsheet software you have. So I'm going to go ahead and I'm going to export this to Excel. Okay. So I'm a Google Sheets user, so I export it to Excel and then I just open it up in Google Sheets and it works just the same. So the first thing that I actually want to do is I just want to highlight all of my data, because I want to copy and paste special values so that as I am maneuvering things around, I don't actually end up screwing something up and changing some of my numbers. So I'm just going to highlight everything and I am going to copy. Then I'm going to right click again, paste special, values only. All right, so I've got my values pasted, and the next thing that I want to do, because this is very cluttered and hard to look at, is I just want to hide all of the columns that have numbers in them rather than percentages. As you can see here, it's already easier to read and easier to compare the numbers and see different trends. So if you remember when we were in QuickBooks, we had all of the data collapsed. So right now, when you export it, it exports it in an expanded format. So there's a lot more numbers here that you'll see. And that's just because it exports it in an expanded format, but that'll be helpful to you later. So the next thing that we want to do is we want to create the actual benchmark itself. So I'm going to add a new column here called benchmark. Just going to copy this and paste the format and call this benchmark. The next thing that we want to do is we want to get the average of the percentages. So I'm going to put a formula in here that says average of these three, and then I can just copy that down all the way to the bottom. Okay, take out all of these guys. Okay, so now we have our benchmark to compare to. So this kind of helps us. Now, if we want to go back and look at this in a collapsed version, because I always like to start in a collapsed version just to see what's off, and then I can dig deeper by going into more detail. It just obviously saves you a lot of brain drain, I guess is the best way of putting it. So I'm just collapsing, or hiding, I should say, all of the rows right now that don't really tell me anything that I don't need to know at the moment. I just right click and hide the rows. Okay, so I've hidden everything except for the totals of each of the items on my profit and loss. So we have the total income here, which is obviously always going to be 100%. And then we have the total cost of goods sold, our gross profit, total expenses, net operating income, total other expenses, and then sometimes if there's other income, that's where this net other income comes from. It's the combination of other expenses and other income combined, and then the net income. So now if we look across at our numbers here, compared to our benchmark, what we can see is that our cost of goods sold averages 1.95%. And in October, we definitely exceeded that. For the quarter as a total, we exceeded that. Now remember that your benchmarks are going to be based on a longer period than the one you're comparing to, or they should be anyways. So let's say it's a 12-month rolling period. So let's pretend that these numbers came from 12 months worth of data, and we're comparing them to this quarter. So, you know, again, raising the question, we need to look into this cost of goods sold and find out why there weren't any in August and September. If we look at our gross profit, our average is 98%. And that would be gross profit, in case you're not aware, is income minus your direct costs of doing business. And by direct, I mean they are expenses that you would not incur unless you were creating the service or product that you're delivering to your customer. And in most cases, it's product more so than service. But, you know, let's say that you're a construction company, for instance. So you've got your total cost of goods sold would be the materials that are needed at the job site, and it would be the labor for the workmen that are, or women that are at the job site performing the labor. Would not include your administrative payroll or anything like that, people who are in the office or, you know, even going out in the field and doing estimates and things. It doesn't include that. It includes, if you didn't have that construction job, you would not have these costs. So that's what cost of goods sold is. Okay. And what we can see here at looking at this benchmark is that, you know, we fell short of that in this particular quarter as a whole and in October. Then, and we know that this 100% isn't accurate. Well, we don't think so anyways, because there's no cost of goods sold. Now, if we look at our total expenses, we usually average about 65% of our revenue. So we were under that in August, which is great. We were over that in September, and we were under it in October. So September is the one that we really want to look at, because for whatever reason, we had more expenses than usual. So we definitely want to dig into that a little bit. So I think you get the idea here. And then if we look down at our net income or our profit, we can see that we normally have a 2% profit. And we exceeded that in August. We exceeded that in October, which is great. But what's really pulling this average down now, again, this is why I say you have to choose your period carefully for what you want to create your benchmarks from. And you may even, after you create the benchmarks, if you know there's something in there that's really just out of the ordinary, for instance, like the PPP loans that people received, you might want to just pull that out of your numbers and then do your calculation so that it's a little bit more accurate and compared to the norm, because those were out of the ordinary things that you probably won't see again. Hopefully not for a really long time, honestly. I don't know about any of you, but I'm over it. So, you know, September is really throwing this number off, so this probably isn't even accurate. So definitely would want to also take that into consideration when you're creating these benchmarks. Even this can look a bit messy, especially if you're comparing multiple periods, or maybe you're just a more visual person and you like to see data in a visual format rather than a bunch of numbers. So one thing that you can do to make this a little bit easier and more visual is you can create a chart of the data. So let's just, for instance, grab our data here. And for the purposes of this demonstration, I'm just going to do a stacked bar chart. So I'm going to go up to Insert. And of course, this is going to be a little different if you're using Excel, but the idea is the same. Okay, so it's giving me a column chart. I want to change that to a stacked bar chart. And and then I have to manipulate a couple more things. First of all, I'm just going to take this title off of here because we don't need a title. We know what we're doing. And then the other thing that I want to do is I want to remove income. So in order to do that, I'm simply just going to, hide that. Okay, so then that removes it from my chart. So now we can see things in a little bit more visual format. So we can see, for instance, that our total expenses here were way out of line in September. So this aqua color is our benchmark. So compared to the benchmark, almost all of the months were less than the benchmark, including the quarter as a whole. So the quarter as a whole was below the benchmark. So honestly, do we need to be super concerned about what happened here in September? Well, I would at least still dig into it, but I wouldn't get too bent out of shape if the additional expenses were something legitimate, because overall for the quarter, you were still below the benchmark. So I think you would be doing okay. And then looking at our let's just say net income, for instance, clearly we can see that we exceeded the benchmark in all of the quarters except for September, including the quarter as a total. So again, do we have to be super concerned? Well, not necessarily, but it's the point of inquiry, so we definitely want to ask the questions. So this just helps you to see it in a little more visual format, and gives you some options of different ways to look at things. I have given you step-by-step instructions to establish your own benchmarks and all my favorite tips, including how to make your benchmarks more visual. But if you want to take it to the next level and learn how to take what we did today to drill down deeper into the numbers and create a repeatable process for future periods, request the advanced version of this tutorial using the link in the description below. As always, if you found this video helpful, please don't forget to give it a thumbs up, and if you haven't already done so, subscribe to the channel. Also, would you be willing to help us get to know our audience better so that we can provide the content you need to make your business or career prosper? If so, comment below. What made you click on this video, or what other questions would you like to see answered? Thanks for watching, and see you next time.